Opendoor Technologies soared after it appointed Kaz Najatian, former CFO of Shopify, as its new CEO, replacing Carrie Wheeler, who stepped down last month due to shareholder pressure. Co-founders Keith Rebois and Eric Wu are returning to the company's board of directors, with Rebois becoming chairman. Rebois, venture capital firm Khosla Ventures, and Wu will invest $40 million in Opendoor to fund continued business investment. Najatian will exit his role as COO at Shopify after September 12th to take on the new position. The company's board has expanded from 6 to 8 directors, with Rebois and Wu receiving compensation consistent with other non-employee board members. Similarly, Tempus AI's stock jumped after the FDA cleared its updated cardiac imaging platform, Tempus Pixel, which uses artificial intelligence to analyze cardiac MRI images and detect conditions like fibrosis and inflammation. The platform provides precise numerical values to cardiac tissue characteristics, helping clinicians make more accurate diagnoses. Tempus has been advancing AI-driven imaging technology and has made significant developments in the oncology space, including the development of the purest algorithm test for pancreatic cancer treatment. It's also made strategic acquisitions, including Arteries and Page, to strengthen its footprint in radiology and pathology. Another energetic stock is Bloom Energy, which is staying fueled by a substantial component order. It had previously announced a $43.9 million supply deal with MTAR Technologies, which was seen as a positive sign of increasing demand and production capabilities. This builds on solid bullish momentum following the earlier partnership with Oracle to supply fuel cell technology to data centers has also contributed to the stock's growth. Bloom aims to double its total capacity to 2 gigawatts by the end of 2026, driven by growing demand from data centers and the booming artificial intelligence industry. And despite the stock's expensive valuation, Oracle's strong cloud infrastructure growth guidance has lifted Bloom's growth prospects. Likewise, Wearable devices' growth prospects have bloomed, following its voice-controlled interface device patent being granted. It covers a technology that integrates gesture recognition and voice control, enhanced by biometric authentication. This could build on financial improvements from the first half of the year, which saw revenues of $294,000 and a net loss of $3.7 million, which is a decrease compared to the same period in 2024. To bring in more positive gestures, Wearable devices also started delivering its Mudra Link wristband. It has launched several initiatives, including a collaboration with Media Exceed Company, limited in Japan, and a project to advance human-machine interfaces for military applications. In other financial developments, Wearable devices recently entered into a securities purchase agreement with a single institutional investor for the purchase and sale of 1 million ordinary shares at $4 per share in a registered direct offering, with expected gross proceeds of approximately $4 million. The company will also issue unregistered warrants to purchase up to 1 million ordinary shares in a concurrent private placement. Wearable devices intends to use the net proceeds for working capital and general corporate purposes. For more on stocks and crypto, follow Ascencore. See you next time.